Alright everyone, here we are with another video with Invest for tomorrow. To the first time viewers to investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So here we are with two dip areas and rip areas that happen in a matter of just a few days, right? These two turned out to be dip areas, full transitions into rip areas, then full transition back down, and then full transition back up to rip area. So the question mark is, could this run continue? We need to zoom out. This is based off the 30-minute, and we also have the bull and bear indicators as extra layers of confirmation, which we're going to pull up later in this video. Now, we have a few articles to talk about, different topics and charts to look at, and this is getting very interesting because the markets are now pricing in 100% risk of a US recession before the year's end based off Deutsche Bank, right? We're going to talk about if this is true, why they're stating this, and why it's looking this way, even though the market is pushing up higher, right? So we're going to break it all down. But before we do, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts with our 42 Vision indicators, check out the link down below in the description to the Discord and getting connected over to our 42 Vision indicators, as well as becoming part of a growing community of investors, all looking to learn and grow together. So these are the three stocks I mentioned this morning. All three of them gave jumps of 3 to 5%. 5 to 10% plus, but one of them turned out to be a home run, and that was DRCT. We caught this one in the pre-market under a bull indicator, full strength towards the bell, consolidating, and after the bell, continuation of strength on 42 Vision, giving a highest point of possibility within minutes of 30% plus, guys. And not only that, but also our QQQ bot sent out a bull indicator since 9:21 a.m. And from that moment forward into the bell and after the bell, there was a continuation of strength and call options went up 200% plus within hours at the highest point of possibility. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators, as well as our bots, check out the link down below in the description to the Discord. We look forward to having you join us. And let's jump into these charts. So here we are with the SPY going higher, and we've talked about the SPY in the last several days about key levels to watch. 372 was the support level to watch very carefully. It hit 371, bounced off of that, had a full run, and if it broke above 393, 390s, it was going to try to hit newer highs. And here we are trying to reach 400, guys. And we talked about how important 400 is. And above 400 then comes 420. But we need to talk about some more interesting things going on right now within this volatility. But let me pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY, and it had a bear indicator on the day of July 14th. It found a bottom and support here at 371. Things started to bring itself back up. Full transitions, got that bull indicator 2 days back to back. And then it finally found a resistance and slightly pulled back downwards, did a full transition into this dip area, and then it got a bull indicator the next day in the pre-market, and then things have continued since yesterday to today, going even higher. Now, we need to talk about how this is reacting right now, and a lot of people were expecting like a bear market bull rally, right? So we're right now in a bear market, yet things are rallying and it looks like a relief rally, but no one has the clarity yet if this is actually the beginning of the end of the bear market or the beginning of just a rally in between the bear market that has not ended, right? So this is why I'm going to continue to embrace the volatility in the markets, not financial advice, just my opinion and perspective alone. I'm going to continue to try to maximize within the volatility by using 42 vision, just like the members in the community are using it within the volatility. And I personally believe volatility is here to stay. And if this is what the market's presenting, I'm going to continue to try to maximize within the moves in either direction, right? So here we are going up higher, almost testing 400 and leaving the lows of 372, 362 and coming back up almost as if the bottom has been left behind. But then we get headlines like these talking about the risk of a US recession is being priced in almost 100% now. And this is something that is looking like it may happen before year's end based off of Deutsche Bank. And then we have here the bear market is far from over as recession risk rise, Morgan and Stanley, right? And they talk about in this article some very key points of how we used to look at things from 75 basis point hike possibility to now 100 basis point hike possibility. And then also how things are right now in a very aggressive stance from the Fed, especially from the Atlanta Fed President Raphael Bostic, how he stated everything is in play. He was asked whether that influenced or included a possibility of a full percentage point hike interest rate hike. And Bostic said that when he meant everything is in play, it would mean everything. So not just 100 basis point hike, it could be even higher, it could be anything. So right now, the Fed is in a focus of using all their tools to go ahead and try to tame inflation. As this article states, how Powell has acknowledged the risk of recession, but his goal is to tame inflation. And then he also stated that there is risk if they go too far. Certainly there is. He said last month, and the bigger mistake is to make it, let's put this way, would be to fail to restore price stability, basically stating inflation getting out of hand. Now, we also have here the bubble expert, right? Jeremy Graham. And we talked about him in yesterday's video. I've popped him up in other videos stating that we could be in a weak earnings that will hammer stocks and warns that the S&P 500 could plunge another 25%. Now, what's interesting about these articles is you would think 25% from the lows, but if the market continues to go higher and push up higher in the charts, well, 25% from 400, hypothetically speaking, if it starts from there and we break above 400, we don't even know where the top is going to be and where things could start to reject if these statements from Jeremy Graham are true, because this is what he's predicting. Well, it just brings down things back towards about 320 to 340, which are support levels that I've talked about in previous videos, especially when we go ahead and look at things from the one-day chart. And on the one-day chart, this is very interesting. It just got its first bull indicator, but we've had these rallies before, just like it did here and like it did right here, and they were short-lived. So some people are speculating, could this be the beginning of things turning around? You'll always have to zoom out and look at things from the bigger picture, because on the one day, this is a big move already. If this confirms, it has 15 minutes to confirm today if it goes ahead and confirms. But we have the 1 week here to watch as well, because we've been under a bear indicator since January 24th. So we've been looking for this 1 day bull indicator for some time since the dip. It kind of double bottom here, triple bottom around 372, 371, and things are pushing up, and it's trying to hold itself up above 393, which is key. But this earnings recession that's kind of in the limbo and people are talking about, and even how Jeremy Graham is stating, this could affect the S&P 500 index and individual stocks in the coming weeks, in the coming days, especially when the guidance goes ahead and doesn't look as bright as people are expecting and pricing in. Now, what I find interesting though is it's just going to continue to be volatility. We have gotten bull indicators on the 1 day before, but something that can go ahead and mean even further strength is if we get that bull indicator to roll over into the 1 week and the continuation of the shifts happen here on the 1 week as well to finally cancel out that bear indicator here on January 24th. Now, that doesn't guarantee anything also, because yes, once those bull indicators do pop up, they last for several months to years, as we see here in the last several times. But this crash correction has lasted almost 7 months. And when you zoom out and you go all the way back to 07 to 09 and from 2000 to 02, you could see that there were moments that on the 1 week, the bull indicator tried to pop up. It was short-lived and continued to pull down. And same thing here with the 07 to 09. So right now, very interesting levels. 362 seems to be the bottom. A lot of experts and articles are coming out and stating that might not be the bottom, and we will not know until we see the bigger picture and much more clarity from these companies and their earnings and guidance. But one thing that is true is we have had small rallies in this bear market that are just about to get rejected every time they're about to take off, right? So this is just the beginning based off the 1 week. This bear indicator is still in play and dominating over the overall chart. But if you look at the 1 day, it's just the beginning of trying to pull itself up in a rally. And also, if you look at 42 vision, we hit a dip area, transitions back up to red with green borders, and now we hit our first dark green. The last time this happened, it did do a complete shift from the dip area to the rip area after that bull indicator, and it lasted for several weeks and days. So super important to realize that eventually we could do a full transition, or it may not even reach bright green and it could reject in the dark green areas as it's done before when you look at the overall picture. So right now, one small move in a bigger picture that is still under a bear indicator. That is something to keep in mind, and not only on the 1 week but also on the 1 month. As I always state, not financial advice, but I think that there's going to be a continuation of volatility, and within this volatility there's going to be opportunities presented daily in either direction, and I'm going to continue to use 42 vision to maximize within those moves, as well as you can now join and gain access to it and join the members using these resources to maximize in either direction while the volatility persists, because that's what the market's giving us. So I'm not going to sit back and miss out, if not maximize to the best of my knowledge within the volatility. As always, guys, thank you guys so much for watching, and let's make some money.